velocity banking. So in this video, obviously we'll be going over velocity banking and the ins and outs, you know, touching on the ins and outs of it and just seeing like what is it, why is it beneficial. You know, a lot of channels talk about it also. I've personally used it, and just to figure out like why use it, what for, what's the purpose, you know. So stay tuned, we'll get into it. Hey kings and queens, before we get into it, don't forget to like, subscribe, hit that bell notification, stay updated on future videos. You know, all that stuff just brings awareness to the channel. And also, and if you're already part of the Kingdom family, welcome back. Thanks for the love and support. Please continue. All right, so let's continue. What is velocity banking? Velocity banking is just basically another tool, skill set, you could call it that, to help pay down your debt, you know, become debt free a little bit quicker, you know, just different little tools. You know, there are other techniques out there that you can do it that's kind of similar. You know, you got the snowball debt pay down, you know, you got the reverse of the snowball debt pay down, something like that. But the one that I use and I like to tell, you know, basically push, you know, is velocity banking, because it's just for me, I feel like it's the best way to, you know, kill that interest. Point being, that's what all these tools help you doing, because the biggest thing when it comes down to debt is the interest. Goddamn interest. So if you're like me, you probably had those high interest credit cards. I mean, my credit card was maxed out. It was like an 18%, but they hit me with that double goddamn interest rate. You know, it was like 18% and then boom, like a 23% on top of that, because of the cash advances I did. I wasn't financially literate, I wasn't financially educated, I didn't know how to handle debt and credit and all that well. So, you know, I had to pay the price. Well, I had to pay the interest, should I say. So, you know, velocity banking helps us kill this interest quicker. Now, how does it do that? By trying to speed up the process. So you take a line of credit, right? You need a line of credit to do this, right? If you don't have a line of credit, then I suggest that you try and go get like a secured card or apply for a credit card if your credit score is decent, maybe like a 650 or above. You know, try and get a credit card, and then you need like a decent amount of credit limit on it. So let's just say that you already have a credit card and it's a 5,000 credit limit on it, right? And you have about, you know, you have a car loan, maybe you have a mortgage, or you have student loans or something, and you're looking to pay those down, but you know the interest is killing you because you're paying interest on the car loan, interest on the credit card, interest on the student loans, interest on the Home Depot thing or whatever, you know, whatever you got. So that's one thing that's the whole point, right? I mean, they make their money off the interest, and we're trying to fight against the interest. So with velocity banking now comes and says, hey, turn your line of credit into your checking. What? Turn your line of credit into your checking? Yes, right? Basically, see, so you might watch a lot of videos and people try to like make it all technical and difficult to try and understand. Basically, you're gonna take your line of credit, preferably, you know, if you have a HELOC, most of us don't, right? So let's just say your credit card. You would take your credit card and you would turn your credit card into your checking. Meaning, when you get paid, you take your money, well, let's just say, right, you get your bills, you pay your bills with your credit card. Then when you do get paid, you basically take that money and dump it back into your line of credit, your credit card, right? So you're paying down, you're paying back the balance that you owe for the expenses, but also you're taking out, some people like to say chunk, or I would say like you're taking out a big amount of that line of credit, and you're gonna put it onto, let's say, your car loan. So let's just take, for example, a car loan, right? Let's say your car loan had about $15,000 on it, and let's say you have this credit card which is about 5,000, right? So you would first off, you would need to have, like, don't max it out. I mean, you need to have some decent balance in there that you can use, right? So let's say you pull out 3,000 out the credit card, right? Now you pull out the 3,000 and you put that onto the car loan. So when you do that, you're paying the car loan, that note for the month, plus the rest is going to the principal. You're paying that down. Then you're like, well, man, damn, dude, now I owed on the credit card $3,000. So let's say you get paid, you take your income and you put it on your card. But then you're like, bro, I still got expenses I got to do. So whatever expenses you can pay with your credit card, you pay with it. You're just paying it back with your credit card, and your leftover money that you would keep in your savings account, you would keep that in your credit. That would be the credit pay down amount that you're bringing it back down. And as the months go on, month 1, 2, 3, 4, when you pay back that balance from 3,000, because remember you took the 3,000 out, 3 maybe to 25 to 2 to 15 to $1,000, then you might be thinking, all right, cool, it's been 4 months, I got my credit card balance back low enough to like $1,000, maybe $500. Now let me go ahead and do it again. So you take out another 3,000, boom, you slap it on the car loan. So you paid off the note for that month. Remember, that counts as a payment, plus the rest is going to the principal. So in turn, you probably paid, so from 15,000, you paid a cool $5,000 to $6,000, right? Not including the first payment with the principal and interest, because man, they're gonna get the interest, right? So by doing that in basically a 4-month span, from that first chunk payment to that second chunk payment with 4 or 5 months later, you just like knocked out like $5,000-6,000 on that car loan, right? In turn, using your money more than once. Because let's say you did it the old-fashioned way. You got paid, you saved up some money, you set it to the side. Let's say you saved up about 2 G's. You took that 2,000, threw it on the car loan, right? Well, that money's gone. It's done. You used it once and it's done. True enough, you paid it on the car. You brought it from 15 to 13, right? But the money is gone. You use it once and it's done, like I said. Now, if you did it the other way, you took the money, let's say just say $2,000, you took 2,000 from the card, you paid it on the car note, right? Same 15, bring it back down to 13,000, and you paid, now you have to pay back that credit line, right? So you pay it back, but guess what? That you still can use that money again, right? It's a revolving line of credit. So in turn, you can use that dollar, you can use it once, twice, 3 times, 4 times, however much you want to. But that's why we need to get more educated on how we use our credit and the different tools that's out there to help us on this debt pay down. Because I know a lot of people out there is like struggling with student loans, car notes and stuff. And if your car note is about $400 or $500, and if you could knock that down in a year and a half by Velocity Banking, then man, just imagine bringing in an extra $400 or $500, right? I mean, for the $500, that's 6 G's a year. Just imagine being able to keep the same job, make the same pay, but all of a sudden you got extra 6 G's coming off and you have a car paid for, right? Title in hand is yours. Now, obviously, Velocity Banking is a little bit more difficult than that, right? Because it takes a good amount of discipline. You need to make sure you know your numbers. You need to either get a hold of somebody like myself or a professional or somebody that's doing it in your like vicinity. There's other many channels. Maybe you follow them. Maybe you can ask them for advice if you feel more comfortable. But whatever you do, you need to get your numbers down. Make sure you know what you're doing and you have a game plan, because this is not a quick scheme or a hack to easily like pay. Hey man, you got a car note for 15 G's, pay it down in 3 months. Nah, it's gonna take a little bit of work, and it's gonna take some discipline on your part, right? Making sure that whatever numbers that you work out with, you stick with it. You don't go over budget on some stuff. Maybe it means canceling on Netflix. Maybe it means not going out so much or eating so much, right? Maybe if you could save a few extra $100 here and there or whatever, maybe you might have to do that. But in the long run, you probably could pay off that car note, student loan, in a matter of, less than 18 months. If you have a mortgage, if you have a little higher income, you could probably pay off your mortgage in less than 5 years. I know you hear it. I see people out there selling ebooks, like, yo, pay off your mortgage in less than 5 years. You want to know how to do it? $5.99. $5.99. Now, Velocity Bank. Get your numbers down. Talk to a professional or somebody you trust that's doing it. Get your numbers down. Stay disciplined, and you can pay off your mortgage in probably less than 5 years, depending on your income and your numbers and blah blah blah, all that good stuff, because everybody's scenario is a little bit different than everybody else, right? My velocity banking for me takes me down a different path because of my income and what I do owe than maybe somebody else, right? So let's recap on what velocity banking is real quick. No, I don't wanna. Boy, if you don't get to learn something. So let's recap, right? Velocity banking is just another tool or technique to pay down debt faster, but what we're in turn doing is trying to kill the interest, right? That's what we're fighting against that, right? Anytime you use that line of credit, you're getting charged an interest. That's how they make their stuff, right? So that's what we're trying to do using velocity banking. Velocity banking now says, hey, let's take a line of credit, whatever line of credit you want to use, personal line of credit, HELOCs, credit cards, whatever you got in your arsenal, and let's use that to attack the debt. Now, how do we use it to attack the debt? We basically turn it into our checking. Now, in order to do that, you need to make sure, once again, that you have your finances in order, your income, of course, that we know that, and your expenses. Expenses. Know what you can cut out and know what you have to keep. Know your wants and your needs, right? Now, the other thing, most important, is, like I said, why do we want to velocity bank? How do we speed it up? How do we velocity bank? Is by being able to take a chunk or a good amount of that line of credit and put it onto something else. You know what I mean? Like being able to take, if you have a $5,000 credit card and with a zero balance, being able to pull half out, putting it on a car note, paying down the credit line, the line of credit, whatever line of credit you have, paying that back down slowly by putting your pay into the line of credit. When it gets back down to whatever you feel comfy with your numbers, you take out another $2,500 or whatever, and you put it back again on the debt that you would like to pay. And you keep doing that month in, month out, until you reach your financial goals. Debt-free or loans paid off or whatever you need to do, right? All right, man, I'm gonna go grab a seat for this one. And the biggest thing you need to remember, right? The biggest takeaway is the numbers. Please do not try and do velocity banking if your numbers is not right, because you could be in big trouble. That if you use your credit, if you try to take out $4,000 or $5,000 out of your credit card, you do it, but then you're unable to pay back that. And then let's say if you was going to buy a house or open up a new line of credit or apply for credit or do a hard inquiry, then you just upped your utilization, which in turn drops your credit score, right, by a few points or more, and that hurts you, right? But so there's more things you need to do. So get with somebody that's doing it, a professional, different channels, or like I said, someone like me or Mike. Our information is down there. Just anybody that could really just guide you with your numbers. And if you do hit me up or whatever, you could just throw some BS numbers at me. You don't have to throw real numbers. Maybe you can just just give me some numbers. Make some stuff up so you can get a general idea of what you can do and reverse engineer that process, right? But it's the numbers. It's all a numbers game, because what we're trying to do is just kill the interest, like I said. And of course, there's more to it. Different things you can do, different plans, strategies. Each person's case is different, but there's a lot of information out there. Books, blogs, YouTube channels, websites. So much different things, and there's so much different people out there giving away free information to help us in these situations. So just remember that it's just it's a numbers game, and just be careful, and you get it. And also, the biggest thing to remember, one, or I guess the second biggest thing to remember, is the point, the whole point behind all of this, right, is just being able to take out a big chunk amount, right, a big amount of credit, pull the cash from the credit card, right, or line of credit, and putting that towards the debt, right, being able to kill that interest. Because let's just say you got a mortgage like myself. I just got a brand new mortgage on a rental property, and I'm going to be paying that for 30 years. So like the first 15, 20 years or whatever is like all interest, right? It's like $100 to principal, and the rest of it is like all interest. So that's what we're trying to stop. The more you can kill the principal, the more you can hit principal pay down, is the less interest you're going to pay. You're going to still pay the amount, but just trying to stop the interest. And if you got any value from this video, or at least piqued your interest, don't forget to hit the like button, subscribe, hit the bell notification to stay updated on future videos. Leave a comment, negative or positive. We appreciate it all. You know, just that type of stuff just brings awareness to the channel. And thanks for being a part of the Kingdom family. Kings and queens, stay blessed. You might want to check out this video or this video. Peace.